Hello traders, this is Julio Pineiro doing today's midweek market focus. Today is the 29th of May. One of my colleagues, Adam, told me to go through some quick slides for the ATM course, which is going to take place on the 5th, 6th and 7th of June. Basically since January, they've been doing very well. There's some really good feedbacks and outcomes from the course recently. So the course is absolutely free, by the way. So if you want to take part of it, just please send us an email to this email address down here, atm@lendtotrade.co.uk, and book your slot. Okay. What else? What other points? Yeah, you can trade all sort of different robots here and there. I don't know too much about it, so I'll leave it for you guys to find out when you take the course. Okay. Right. Now, what I'm going to cover today is a few bullet points. The title of this week's midweek market focus is the inverse correlation between the major UK indices, the FTSE 100, and cable, yeah, pound versus US dollar. First of all, normally, when the US dollar goes down, the stock market rises, right? Sorry, that's the opposite. The stock market, I mean, the Dow Jones, the S&P, and the Nasdaq. These are all indices, US indices. So basically, when the stock market rises in the States, the US dollar goes down. So that's the opposite. Okay. For the past few months, the US dollar has been rising, and the stock market is been going up too, which is not common. Okay. However, this correlation can be seen with the UK indice, the FTSE, and the currency in the UK, British pound versus the US dollar. So we're gonna have a look at the charts now in a minute. Some other bullet points are we can see a big sell-off on Aussie and a potential reversal. It's giving a massive low test bar on the weekly chart even, and it's right at the bottom. So we could potentially see a turning point from down there. And also the euro is being very messy. I haven't traded the euro for a long time. In fact, I make most of my money trading stocks for the past 2 months. The euro is still a bit messy. There's some better currencies to trade apart from the euro. And also another one that I've got here, another bullet point, is the descending triangle you can see on silver. Okay, it's a beautiful descending triangle that we're gonna go through as well. Right. Oh, hang on a second, because I still need to come out from this page. There we go. And now I'm gonna open up the signal. That's better. Right. So let's have a look at cable. This is the monthly chart at the moment. You can see it here. So what I'm going to do is to click on comma D and then enter, and we go to the daily chart. Okay, so on the daily chart we can see that since beginning of May, let's say, the currency has been going down. Yeah, one of the major currencies, cable, pound versus dollar. So it's been going down, and today has reversed. Okay, today has reversed and it's pushing up slightly. Fine. Let's go to the FTSE. We can see here clearly that throughout May it's been going up, and today, and then reverse a little bit, and today we have a seller bar there. So it's actually doing the opposite, isn't it? It's been going up in May, reversed, and even today we have a seller bar. Let's go back once again to cable. It's gone down, reverse a little bit, and today we have a bullish bar there. Okay, right, so there's an inverse correlation, it's doing the opposite. Okay, which is what normally happens. And as I said, in the States, it's not happening. The stock market is rising, and also the US dollar is also going up. Right, the stock market is making new highs. Dow Jones is making new highs. The S&P is also making historical highs. And there'll be a pullback, but until then, everything, everyone is just gonna carry on buying it and buying it until it turns, really. Right. What's happening here is that it's actually sitting on this level here, down at the bottom. It's not very clear what's happening at the moment. Could potentially pull back up to the 20 or the 50, and if it breaks through, it's gonna go down to this level down here. Okay, there is no clear trend or pattern. There was a beautiful pattern here, but it's been broken quite a while ago. Yeah, we've all seen that on the daily chart, and now it's broken. Yeah, we're expecting it to carry on, but obviously the channel is not gonna go on forever, and now it's been broken, and it came back down to this previous low, and that's what it is now, and it bounced there twice. A bit of a double bottom formation down here as well. So there's a double bottom formation. Got this indicator pushing up from here. Just giving a bit of a divergence there. Yeah, in fact, if you connect this one here, it matches up with that one. And then this one here matches up with that one. Oops, sorry. There and there. So I'm connected this point here with that point. Yeah, make sure you get the same point, and then here, that one with that one, and all you have to do is to connect them, and then you'll see the divergence there. And he gave a double bottom formation. It hasn't broken through the lows. It's a bit of noise down there, and it's testing this level and that level there, and it could potentially, as I said, bounce back up to the 20 or the 50, and then you could even break through to the downside as it broke through this pattern here. Okay, let's see what's happening on a higher time frame for the bigger picture. Same thing, beautiful pullback, came back down, and it's low testing down on this level here. Fine. Okay, let's go to Japanese yen. As we all know, Japanese yen has been rising for a while. We had an inside bar, a misleading inside bar on the bank holiday with low volatility, so the likelihood of getting inside bars on a bank holiday is quite massive, especially a UK bank holiday. So as we know, most of the volume and the volatility is done in London, and if there is a bank holiday in England, then the likelihood of getting an inside bar is higher. So there is a false signal here, this inside bar here, which was giving a potential buying opportunity. So some people got triggered in here, making high highs and high lows. It's going up, was bouncing at the 20 moving average. I know some people that were buying it here on the bank holiday with low volatility, and then got triggered in, and now it's reversing. Okay, it's reversing due to the stock market. Yesterday, everything went down slightly, so it's been because there was no news today in the mornings. So all this move it's being caused by the stock market. The euro is very messy and choppy. Okay, looks very similar to cable, although cable is not as messy. Swiss is similar story as the one on Japanese yen, giving high highs and high lows. Gave a false signal here, inside bar there, due to the low volatility on Monday, bank holiday, triggering, and now it reversed big time. Yeah. Kiwi. See we daily charts, see what's happening. Coming down to this load, could potentially bounce back up. If it does bounce back up, then it will drag also with it, which is the one I wanted to cover. We got Australian dollar here on the daily chart, as we know had a big sell-off, big rally to the downside. Fine. Now is currently sitting on this level down here, crucial level down there. There it is, and it's giving a low test bar bouncing off this level down here. Now if we go to the weekly chart, it looks even better. So if we go to the weekly chart, that's where the level is. If you go to the weekly chart, sorry, excuse me, just open it up a little bit. Go to the weekly chart, you can see that it's also giving a low test bar. Well, that's what it's done there a year ago, around the same date. Can you see the correlation there as well? So this week here, which was the last week of May, since that moment it reversed. So it dropped down massively till mid-May, like here. So it was since March, and after yeah, since he has been since kind of very similar pattern. So it just crashed down for 2 months or so, and I could potentially reverse back up because that's what it's done last year as well, right? So this is called seasonality, seasonal charts, which are some websites talking about seasonality, which we're not gonna get there now. So can you see that? What happened? Came back down, reversed, and it's down here, giving a low test bar, so it could potentially reverse. Fine. We go to the daily chart again, giving a low test bar, over a stretch from the moving averages, it could potentially push back up. And it's right at the bottom. Okay? So we could see this move here happening. And here it actually went up all the way to the top. Pretty amazing, I have to say. This against the trend. So if you're looking at these patterns here, these for master traders, you can only start looking to buy as the upward trend is being established. Then you can look for long opportunities on the different strategies. Well, for it to be on a sniper, it will have to be above the 50 moving average, which is pretty far away. But as the price moves, the 50 moving average will also move, so it won't be as further. And for pivots, you will looking for the correlation from the 60 to the 5, but this will have to go up for a while for the 60 minute to be pushing up, and then you're looking to buy on the 4 pivots on the 5 minute time frame. Canadian is currently right at the top. He's right at the top there, and this could potentially reverse back down. Okay, these are again master trader setups. Let's have a look at the crosses. Europound, very messy. Well, it's all above the 50 moving average, so above, and above. For snipers, what you have to wait for is wait until you get some clear setups. Here it's not bouncing off the 50 moving average. You'll have to be bouncing nicely off the 50 moving average for it to be valid for snipers. Okay, this kind of setup has to be bouncing nicely there. Euro Swiss, like here, it is bouncing nicely, but it has to be all in agreement, all below the 50 moving average, which here is above and below, because it's above and below the 50 moving average. That's why it's red and green there. And if it goes down a bit more, it's going to be below the 50 moving average on the daily chart as well. Euro Aussie, it's been rising due to the move on the Australian dollar. Nothing there now. Euro Canadian, Right, what's happening here? Right, we got Euro Canadian above on the daily, above on the 4 hourly, phase one there. On the 60, we had a big move to the upside. This could be the potential phase two pushing down, and here is giving snipers, but it's not very correlated with the 60-minute time frame because this could potentially go down, which means if this chart goes down, on the 5 minute will also go down as well. Okay. So if we go here like that, here is making high highs and high lows. If you enter there, the stop loss will be 20, which is there where this line is, and here will be 20, which is below the previous swing high, which is great. But if it goes down 20 pips here on the 60-minute time frame, down 20 pips here will mean that it's gonna go down to the 20 moving average. Okay. So I wouldn't be keen to buy there, as it's already breaking through. There it is, due to the pullback that is happening on the 60-minute time frame. But on the as it pulls back down and it bounces off the 20 moving average, it might set up on the 5-minute time frame. Okay, it will have to make a new high as well before taking it. Alright, let's go to some of the pound crosses. We've got pound yen making high highs and high lows there. Kind of, well, all the yen crosses pretty much. There it is, it's in between the moving averages. Pound Swissy. Pound Swissy is currently making higher highs and high lows, bouncing off the 50 moving average. It's reversing back down today because of Swissy. We got pound Canadian, which is still trading within this big channel that we have. There it is, and still there. And now it's pushing back up massively again. There it is, pushing back up towards this level here again. So for those of you who've been listening and who've been going through pound Canadian and waiting for these levels to be reached, it's done it 2 months ago and back up again. Obviously it's not going to go up on a straight line. It will pull back, but the key is just to sit and wait. This is master trader again. If you're looking, this is not for this currency. To be honest, it's not for intraday trading because the spread is very expensive. It's like 9 pips commission on ETX, and I mean you could potentially trade ink and generators, but it's not the best due to the spread. Okay, so it'll be for really long moves, I would say. This pound Aussie, which is just going straight up on a straight line due to the move on Aussie, could potentially go up a bit further. There's nothing holding it there. So yeah, I mean, it's going up. You can look for potential snipers as it's just been going up for a while, like here, going up. Just buy. Make sure the spread is not too expensive. On ETX, it's like I think it's 12, even more expensive than pound Canadian, 12 or 14, but it depends on the broker you're using. Different brokers, for instance, FXEM, I think is between 3-4 pips. It's much cheaper to trade crosses. For majors and minors is much better ETX. We got pound Kiwi here. Scanning reversing. Fine. From the bottom. Okay. We got Swiss yen. All the yen cross has been going up. So I wouldn't be keen to buy it there, as it's not making high highs and high lows. We got CAD Swiss. We got CAD Swiss here. It's currently making higher highs. It's on the 50 moving average there now. And again, CAD Swiss, it's been performing quite well. It's a beautiful level there, which rejected it. and it was giving any fib level there as a 1.2 Fibonacci extension from the swing high to the swing low. 1.2 Fibonacci extension. He was giving divergence here as well. It's giving divergence, bouncing off a level, came back down by the 50 now. And he was giving a high test bar there as well. Some beautiful high test bar. That's an inside bar, gave a low test, followed by a high test. And it actually bounced off this high test bar up here. But because the opening and close are within the level, still there. The level is still respected because the opening and close are within the level, which means to the downside below. If they were opening and closest up here, then this level would have been broken. Okay. Now it's pushing down quite aggressively from this beautiful high test bar here, bouncing off a level there. We got CAD yen. CAD yen could potentially set up for income generators to the upside. It's just going up nicely. There it is. Let's put the IG page. So there we go. IG page in place. Now what you have to do is to identify the buying zone, which is here. That's a buying zone. So from here to here is 100. This is 20% of this whole move or the first quarter. Obviously, if it's going up, it's gonna be telling you to buy it, yeah. So I need to buy if it's going up. And what you're expecting is just to carry on. These high highs and high lows to carry on going up, making high highs and high lows. So if the yen rally continues, then we're gonna get a new high there, and then it's gonna pull back and so on. So just trade what you see. Trade the channel there. Still above the 50 moving average. Might get a low test bar there, and it's gonna give a nice reward to risk ratio. If it gives a nice reward to risk ratio, this could be a potential trade there. Going up fine. Kiwi Swissy. Kiwi Swissy, excuse me. There we go. Let me just take this indicator out. Right, so we got Kiwi Swissy. It was going up nicely for a while, making high highs and high lows, and now it's been pushing down. Although I don't like this channel because it's a bit too tight and small, very tight and small. It bounced off the 200 moving average. Okay, and now it's very tight and small, not very clear. This channel here, I wouldn't trade it. It's better if it gives some nice, decent cycles, like here. These are beautiful cycles. Okay, phase 1, phase 2, phase 1, phase 2. Yeah, phase 1, phase 2. So this is kind of cycling nicely. Here it's too choppy and messy. Aussie Kiwi keeps on pushing down. These are all historical lows. Let's see. Oh no, not on Aussie Kiwi now, but it's quite low. Definitely. We could see if Aussie reverses, we could see major pullbacks on this currency too. Got Aussie yen here. Not clear at all. Not clear. Not clear. Now we got Kiwi Canadian. It was also making beautiful high highs and high lows for a while. There it is. Came back down to here. Now this channel is being now broken. If you go to the weekly chart, could potentially draw a new channel on the weekly using a much larger scale, and there it is. Let's attach that one there as well, and then we copy and paste it. Making high highs and high lows. This could potentially pull back up to here. But now if you look at the market correlation between the weekly and daily, could potentially happen, although it's broken through this pattern here on the daily. But it came back down to the weekly pattern there. So we could potentially see a big move up to here. So I'm gonna keep an eye on that one. And we got now the FTSE at a big sell-off. It's gonna close in less than 2 hours. Had a big sell-off as the market opens. Had a big stumble there, and now next one is the Dow Jones. Had 2 low test bars followed by a high test bar there or a key reversal, and then it didn't gap, but it came back up, pushed back down and closed down here. I could potentially see some moves to the downside when the market opens now, officially in 15 minutes London time. It will open at 2:30 London time. You'll be watching this video in a few hours, so by the time you watch the video, all the US market will be all up and running until 9 PM in the evening. Yeah. Now we've got the S&P, which gapped up and then came back down and closed. Nasdaq had a big gap to the upside, came back down and closed. It's gonna open very shortly in 15 minutes. Now we've got the dollar index. The symbol is DX space A0, and you get the dollar index there, which is currently pushing up, as we said before. So it's going up, and the stock market is going up too. Now we've got gold here, which gave a double bottom formation, not very powerful. We also have a silver, which is giving a big descending triangle. Big descending triangle here. Sitting on this level here, you have a big, massive low test bar, and it came back up. Descending triangle is an indication that it's going to be breaking through the downside. But triangles in general, it could break either way. Okay, especially symmetrical triangles. So this could break to the upside, or it could break through the downside. As it is now, and it's a descending triangle, it looks like it's gonna break through the downside. And descending triangles break through the downside, ascending triangles break through the upside, and symmetrical triangles can break either way. As it takes these lows out, you can see a big sell-off ahead. If it breaks through the 20 moving average, it can have a big rally. Okay, so we're gonna keep an eye on that one. And we got platinum here, just doing nothing. There it is. And now we've got some of the stock market. We've got, for instance, Apple, which is highly correlated with the Nasdaq, and it gave a beautiful inverse head and shoulders on the daily chart. Yesterday gapped up and is currently pushing down. Same as the Nasdaq as well. Okay, so we'll see what happens now. In 12 minutes, it's gonna open. I'm gonna have a quick look at the indices. Alright, now let's have a look at the stock market now. Right, banks been flying. Actually, we have a look at banks first, yeah. So we got Barclays going up, clearly there, pushing up, breaking through these highs, fine. We got HSBC, which is making higher highs and higher lows, broke through the highs. He's gonna start looking very bullish. Again, we got Lloyd's, broke through the 60 mark there after quite a while, after the big sell-off that we had, and it's now catching up. There it is. We've got RBS, which I've recently closed my position after a big rally to the upside. I closed it like somewhere here, and then it carried on going up even. And again, I was actually buying shares, and I just came out recently. I got in like somewhere here. Well, there I think it was there, and I've closed it like here. Not one here. They move out again. I'm gonna pull my hair. You can always catch it again as it pulls back, and now it's looking clear to buy. If it makes higher highs and higher lows, then that'll be the channel there. Right, let's do the homework here. We've got RBS making higher highs and higher lows. This could potentially go for a while, this move. By the time you realize it's going to be trading up here. Break through this high, it's going to carry on going up even further. And if you go to the monthly chart, it hasn't even moved. See that? That's a monthly chart, that's £6 a share. And today is trading at below £1 a share. It's very, very low. Extremely low. And there is zero here. Okay? The zero down here, it went down to, I think it was 14p a share or something. Very, very cheap. Down here. After it crashed. So, as I said, this can go on for years even. It can go for a while. Just follow the pattern. High highs and high lows. And all the rest of it. Right. Mining companies, they're still struggling. We've got mining companies down here. They're still struggling actually. Anglo American. Giving a low test bar down here at the bottom. Fine. We got those struggling. Got this one here. We've got Eurasian Natural Resources, which, if you look at the monthly chart, it's right at the bottom as well. Big move ahead. Although this company is going to be taken out from the FTSE 100 together with some other companies. So I'm going to keep an eye on it and see. Oh, this company, big company, broke through, still pushing down. They're all pushing down massively. Polymetal, Rio Tinto, pushing down as well. It's kind of struggling to break through these lows here. It's giving low test bars, bouncing off this level down here. As it wouldn't be keen to sell it unless it takes their lows out. If it puts a new low, then you can just sell it all the way down. Right. As I said, I made most of my money trading stocks. I had some big moves. For instance, EasyJet still flying. There it is. As expected, came back up to the top of the channel again. It's been going up for a while. Now we've got where is it gone? Thomas Cook as well. See if I can find it. It's kind of been pushing up quite a lot. There it is, Thomas Cook. Pushing up, making high highs and high lows. Gave a low test bar not too long ago almost bounce of the 20 moving average. It gave 2 low test bars in a row after making a new high. Volume is almost 2.5 mil. Still open, and it will close at 4:30, so the volatility will increase still, and it's just flying, it's just going up. So all you have to do is to wait for a pullback and keep on buying it and buying it. Okay, they were struggling down here, and it's been flying for a couple of months now. And if you go to the monthly chart, it even made a new high. Okay, fine. Now Stagecoach in a big range there. Leave this alone. Let's have a look at potentials or chemicals. Right, nothing there. They're still making. It's a bit choppy and messy. We'll leave this alone. Nothing there. Nothing there. Nothing there. See the financial services. There it is. Oh, by the way, here it says financial services, but then when you go and find the sector on this list, it will say general financial services. Okay, which is that one there. So it's a bit tricky. You have to make sure you remember that. Right, we've got even Man Group. Well, Man Group is one of the best companies you can get now, to be honest. They're doing very well, fundamentally and also technically as well. Everything is telling you to buy all the ratios, all the earnings per shares, and they're paying great dividends. This company is known for paying out great dividends. I mean, it's a great company. Technically, it's making high highs and high lows. It's been going up for a while. It gapped recently. So if you go to the monthly chart, it came right down to this level. That's zero there, so it was a big sell-off there. But I can see this picture going up all the way again. Okay, at least up to here, quite easily within the next couple of months or years even. But there is no rush. If you're not trading, you can just wait for high highs and high lows. Make sure it's not gapping like now, because recently it gapped there. So ideally, with no gaps, and get a nice high high and high low, high highs and high low there. Then you can be looking to buy there a nice bounce of the 20 moving average and low test bar. So it can be good for power plays or 20 bounces. I don't like trading when you have these gaps here. Okay. Right. What else? What else? Have a look at Prudentials. Right. Prudentials, that it goes twice from A to Z. So if it's not on the first list, it'll be on the second list. I'm looking for Prudential. Here it is. It's on life insurance. That was the one. And let's see what's happening here. I've drawn this channel quite a while ago, months ago, and it's just following the channel. Okay, the channels they run for a while. So that's why you have to put all the lines on it, and then based on your analysis, then ask yourself in which part of the cycle are we trading. Are we in phase 1 or in phase 2, and wait for a pullback, wait until it goes down to the buying zone, and then look for long opportunities to buy back up again. So as it pulls back up a bit further, if you give a nice low test bar of the 50 moving average, it's going to give a great reward to risk ratio, and it'd be a great trade there. And the company's doing very well there. Beautiful pattern there as well. Nice trend. It's all aligned as well. So it's great. Okay, keep an eye on this one here for long opportunities. And those are the ones that I've been keeping an eye on, and I've been also trading as well myself. I'm gonna go back onto my page. Now it's 2:30. Now the market is going to open in the States. There we go. Big sell-off. There we go. Big sell-off on the Dow Jones as expected. Okay, let's see the other ones. S&P as well. Big sell-off as well as expected. And the Nasdaq. Big sell-off, and it even gapped. Okay. It even gapped, and it opened down here, just below the 3,000 mark. It was above the 3,000, and it gapped, and it opened below the 3,000 mark. Okay. The FTSE is currently pushing down. It's gonna close in 2 hours. Big sell-off on the Dow Jones. There, one of the index in the States. There it is, pushing down. And then S&P still. There it is. This is the first minute, by the way. Which is when you get the gaps. There's a tiny little gap there as well. S&P 500 E-mini futures. Got the Nasdaq that gapped and is fighting back again. I wanted to go up actually. And now we've got Apple pushing up. Happy days. There we go. So we got Apple that has recently opened 2 minutes ago, and it's fighting and it's pushing up. So it officially opened at this price here, 440. Let's go to the daily chart. Put the cursor on top of the bar, and the open is 440. Yeah, 440.00. Fine. This bit here that you see, this is the pre-opening. This move here is all the pre-opening. That's midnight. Yeah, that's a pre-opening. It's currently pushing out quite aggressively. Quite surprising actually, because Apple has like $420 billion and is trading on the Nasdaq Stock Exchange, which is it's actually the biggest stock market. Okay, so it's a big money there. So it kind of tends to do the same thing, although there's some other big companies on the Nasdaq as well, like Microsoft and some other ones. But Apple is a big player in the Nasdaq, so it tends to do the same thing. But because the stock market has been flying for a while, then we were expecting the US dollar to go down, but it's been going up as well. So the correlation's been not as expected, because as we know, that's the opposite. Just remember that stock market and the currencies, they do the opposite, yeah. As it's happening on the FTSE, with the FTSE and the cable. Okay, I'm gonna leave it here. I hope you guys enjoyed it, and I'll catch you soon. Take care, and I'll see you all soon. Cheers there. Bye now.